Have you ever thought to yourself, what are the best strategies that I can trade right now that fit the macro environment that we're in today? Well, in this video, I'm going to show you how I think through the macro environment and how I search for the best trading setups so that I can have the tailwind behind me and have profitable trades in my portfolio. Hi, I'm Prosper Jonikin, former hedge fund manager and founder of TradeTonic. TradeTonic is a quant-based, research-driven options trading platform for serious options traders. Okay, so in this video, we're going to dive into the approach that I take as a former hedge fund manager and now options trader of how I look for and find opportunities in the marketplace. So we're going to start with the TradeTonic app. Once you're logged in, if you don't have this downloaded on your desktop yet, you can. Just click this install app button and you just download it on your desktop. You won't have to go to the browser. So let's go over here to our navigation tab. We're here on the dashboard, and the dashboard just kind of really lays out a broad overview of the things that's happening in the market today, right? So we're dealing with options, so of course we want to pay attention to volatility. We see volatility is a little bit elevated. We're at 18.32 today. Let's go and take a look at what's happening in the macro environment, because like I said, we start with the macro and then we drill down from there. So we can click on macro details, and macro details will show us the macro regime that we're currently in right now. Now, our models have over 32 macro indicators that are baked into the logic that we use. Now, our models are telling us that right now we're currently in a stagflation regime, right? And because we're in a stagflation regime, there are particular trades that usually work well for in this particular market. And so what we want to do is, now that we know that we're in stagflation, the next thing we want to do is we want to find some plays that really work well for that. If you scroll down, this kind of gives you a snapshot of the top 12 indicators that we use in the industry, whether you're a macro trader, you're a fund manager, or you just kind of like to understand broader macroeconomics. These are indicators that you're extremely familiar with. So if we go further down, we take a look here at the quadrant, the inflation matrix here. We see that right here around the stagflation, not quite deflation area, right? So let's go back up and take a look at, okay, what are some plays that usually work best in this particular market, right? And so it's going to take us to the top plays section. Now, in our top plays section, so remember, we started with macro, and because of that, we know where we are in a late cycle tightening or stagflation area. Now we want to find opportunities that fit that regime. And our top plays scours the market and it finds those opportunities for you. And you see here in our machine learning models, we actually bake in all of those indicators, the 32 macro indicators that we have. And then we also pair it with our quant models that we have. We have over 4 quant models that price the binomial options pricing model. And we pair that with the macro regime. And that lets us know if the options in the chain for this particular company is either rich or cheap, right? And so there's a lot of data that's being explained and compiled into this. And so what we did was we took our large language models and we were able to provide you with detailed explanations of everything that's happening in these particular trades. So let's find an opportunity. We're going to put a trade on today. So you see here, there's this JP Morgan collar, right? There's a ExxonMobil vertical. We see this JP Morgan has 4 stars, 77% favorable. And if you hover over this, once you're in the dashboard, you can see it says, okay, well, how well does this structure match the current regime? So from 0 to 100 is the range. Strong or favorable means that there's a tailwind behind your position. Caution or headwind means to size down or to skip, right? So in the current tightening or reflation environment, this collar aligns well with the macro tape. Low implied volatility complacency trap, favor hedges, collars, and put spreads over naked gamma. Elevated vol, widened wings, and reduced naked gamma, right? And so we see our Our score here is right at around 77. So this trade is very favorable. I also, when I manage my fund, I also like to find idiosyncratic opportunities, right, to kind of help the position within the portfolio. So no matter what happened in the portfolio or in the market, this opportunity will perform well on its own. So why this play? Okay, it's a multi-factor read. We're in the contraction cycle plus balanced sentiment. It has a 68% model probability of profit with a 44% confidence in the probability of profit estimate. This collar aligns with the combined backdrop. A left skewed distribution, downside scenarios outweigh upside until fear washes out and the range of outcomes narrows. Now, you may say, okay, well, that's cool. It told me what the macro regime was. Now it told me what's a really good trade that fits that macro regime, which is a collar on JP Morgan. Tells me how favorable it is. Now, how do I know to put the trade on? And I'm glad you asked that. So we'll click the Analyze button here. Let's see if we can refresh this. Okay. Let's go back to it. Once we refresh the screen, and it lets us know, okay, this is how we can put this collar on, right? So how to structure this trade? We would sell, first we would buy the 330 put with an August 21st expiration. The next leg, we would sell the 350 call, the same expiration, right? And so the position sizing will be a little bit conservative here. Let's just do one contract of each, okay? Now, the profit targets or the way to exit the trade, because you may say, okay, how do I put the trade on and when do I exit it? We answer that for you. You take profits on the long put when JP Morgan reaches 352 with follow through. The collar protects downside while capping upside. Now you stop out if JP Morgan moves 5% below entry of the 326 strike before the hedge activates. You reassess the collar width. Okay, so if we kind of go to our charts here, let's see where JP Morgan is trading at right now. All right, we see JP Morgan is at 341. And in this particular position, we are, okay, so it's net credit, right? So we're selling the highest strike and we're buying the lower strike, right? And so we're essentially saying we're going to be net short this JP Morgan trade, okay? Now let's scroll down again. This gives us a little bit more detail of why this trade fits the current regime. And also the machine learning insights, right? The machine learning flags strong historical pattern match with this bearish short-term drift, 73% calibrated with this particular trade. Now let's dive in and look at the P&L analyzer for this particular trade. All right. So for this collar, the P&L analyzer says, okay, the stock, if it drops 3% from where we are, or if it stays, if it goes plus 2% from where we are, we'll pretty much be kind of in the same category. But if the stock moves down 5%, that's when we really start to see a lot of P&L. Or the stock moves up greater than 5%, we'll start to see a loss in this position. So if we're reading the P&L curve at expiration, the payoff diagram shows profit or loss at expiration across the stock prices. All right, so flat segments mean max gain also reveal gamma risk near strikes. Let's move down here. One standard deviation expected move is a negative 5.25 to a positive 4.6%, which gets us within that 68% probability band. And so the actual range of the stock prices would be between around 325 to 356 on the high end. So what we'd like to do here, now that we know what the P&L could be, let's try to test out like what would happen if the stock price moved in our favor. So let's say the stock moved down 2%, we'd be up $200. Let's say it moved down 7%, we'd be up $1,300. Now let's say it goes against us and the stock moves up 5%, we'd be down almost $800, right? So if you kind of want to have an idea of, okay, what are some scenarios if the stock were to move in this particular direction, you can do that. Now, originally we said we wanted to add one position, but let's just add two positions, right? And see how it moves. So it could be up $2,200. So we have a net credit, like I said, of $2 and where was it? Here on the under the analysis tab. $2, a net credit of $2. So what we'll do is we got the position of 2, right? We understand our risk. So let's put this at 1, right? We want to stay within our risk within our risk parameters for this particular trade. And to test this out, to test this strategy out, we're just going to add this to our paper portfolio. So let's add this to our paper portfolio. And now that's added to our paper portfolio. So our JP Morgan zero cost collar is now in our paper trading portfolio. So let's go and check that out and see where we are. Okay, so we have this position on with JP Morgan, right? The zero cost collar. And we see right now, we sold it for $2 right now. The market price is 1.97, right? What we're going to do over the next few days, because this contract doesn't expire for another, was it August 21st? So the date to expiration on here it is, 35 days to expiration. So we'll watch this. We'll keep an eye on it. The zero cost collar on JP Morgan. That's the trade of the day. And that's all I have for you guys. We're doing a beta launch for TradeTonic August 1st. The platform will be available August 1st. Go to the website at TradeTonic.com here. TradeTonic.app, excuse me. Because if I don't log out, it's going to assume that I want to be in the portal. So go to TradeTonic.app, peruse the site, get more information about the platform. Like I said, it's an institutional grade research and quant model for serious options traders. This site will tell you everything about the platform, right? There's 8 different tools that are baked in there. We have thesis-driven ideas with macro context, like I just showed you. So we provide you with everything you need right here in this platform. And that's the benefit and the beauty of TradeTonic. You have a lot of other options platforms that give you a lot of ideas in a scanner form, or they may give you some trades around gamma, or they just give you an opportunity for you to just place a trade yourself. Now, we don't do any live trading in TradeTonic. It's mostly paper trading. But however, if you're looking for the heavy quant base and heavy research base knowledge boost or advantage, TradeTonic is exactly where you'd like to be. If you're a serious options trader and you're looking for that edge, that alpha to really get you to outperform the market on a consistent basis, TradeTonic is the app that you want to be using and you want to subscribe to. You can try out the application for 7 days free, no credit card needed, and I guarantee that you will really, really enjoy this platform. That's all I got for today. Be sure to like and subscribe this video, or like and subscribe. Follow my account for more videos like this every day where I'll come on and I'll share more tips and more trades so that you guys can put them on yourselves and make money alongside me. All right, until the next time, peace.